What is up, you beautiful happy hustlers out there? I hope that you are having an amazing day. I mean it, just enjoying this very moment right here and right now. And in this episode of the Happy Hustle Podcast, we have on Mr. Kent Ritter, who is a former management consultant. He's a startup owner and he's a corporate executive turned full-time real estate investor and operator. Kent is the CEO of Hudson Investing, a multifamily investment firm that helps business professionals scale and diversify their businesses. Guys, Kent is a wealth of knowledge. And for me, it was really interesting to learn more and more about real estate as I enter that, realm and really dive into how to create passive income. And I wanted to bring Kent on the mic because he's happy hustling in his niche and he's doing it at the highest level. And I want you guys to learn from him just as much as I want to learn from him. So without further ado, y'all, let's dive into this episode of the Happy Hustle Podcast. And real quick, guys, I just want to give a huge shout out to this episode's sponsor, Nootopia, who is making my favorites. You know what they are. They are nootropics, baby. And those are basically brain optimizing, natural, legal supplements. I personally love this Xamarin juice right here. I take, a little squirt and it helps with pretty much rapid neurotransmitter stimulation, increasing verbal recall, memory, focus, cognitive performance. They have 9 different unique formulas that really change the game. If you're making money with your brain, you owe it to yourself to try them. And I'm not a product pusher, for things that just I don't believe in. Like, I'm very adamant on what I put in my body and very diligent. And for me, these nootropics are heavily tested. They're scientifically proven and they make a difference. You feel the difference. So if you guys want to get the hookup, you can go to nootopia.com/happy hustle, save yourself some money, get the world domination box. And it's that 9 different, formulas of nootropics, and test them out, see how you like them. And if you don't like them, send them back. You got a 365-day money back guarantee. So nothing to lose, everything to gain, y'all. Now let's get back to this episode. All right, Kent Ritter, welcome to the Happy Hustle Podcast, my man. I'm super excited to connect.
Yeah, me too, Kerry. Thanks for having me on. I'm excited to be here today.
Yeah, man, this is gonna be a fun one. It's interesting to meet someone in the real estate market who is also happy hustling, like not just in it for the money, not just in it for the success, but also doing it for a purpose. And, I heard you on a podcast recently and I really liked your vibe and I wanted to share you with the happy hustlers out there. And I know you have.
I appreciate that.
Yeah, man. Really well, it's true. It's true. It's like, it's more than the dollars and cents to me. And I know to the happy hustlers out there, it's about having that holistic balance and enjoying the journey every step along the way. And you seem to have that. So yeah, I'm excited to talk more about it. But before we do, what's something interesting, Kent, that not too many people know?
Man, that's a good question. Gosh, because I've been thinking about this recently, I've been to like 47 of the 50 states.
There you go. That's awesome. Which one's your favorite?
Oh man, that's hard. That's hard.
Which one did you enjoy a lot?
I love Colorado. I love Colorado just from a lot of different aspects. Like I love to ski. Yeah. I also really like to hike and camp and I had some great trips there as a kid, just going camping and going in the mountains and hiking and skiing and all that good stuff. I always love it out in Colorado. That's one of my favorites.
There you go, man. You got to have to come up visit Montana too. I'll show you around some hiking and camping. And
Montana's got all that stuff too. I haven't spent a ton of time in Montana. Like I think we were talking about before, like I'd only been to Montana briefly on a work trip one time. I didn't get to have any fun out there. So yeah, man, let's get out there.
Yeah. Well, don't tell too many people, everyone should just go to Colorado and just know that Montana has so many grizzly bears and it's very cold. You guys don't want to come here. You can, but no, I'm kidding. Anyway, man, let's talk about real estate. What got you into this market, like, and this industry and this business and kind of give us a little backstory.
Sure. So, I started my career in management consulting, which is, and I spent 12 years doing that, kind of out of school and for the next 12 years. And really as a management consultant, what you're doing is companies hire you when they have a problem. They have a big problem they can't solve themselves, and they fly you out there, which is why I've been to so many states. They fly you out there to help them solve their problem. And so doing that for as long as I did, man, you learn a lot. You see a lot of different businesses. You see what works. You see what doesn't work. I started to really see some common themes about like what doesn't work. And I've been able to, it's really valuable. And I bring that up because I've been able to apply a lot of those principles to building my own business and building out my real estate business. And it's translated really well from managing large scale, multi-million-dollar projects, getting people on board, getting them to all go in the right direction. I mean, that's a lot of what I do from a real estate standpoint. Real estate deals are managing multi-million-dollar large scale projects and getting a lot of people moving in the right direction. So it really does translate well. In 2010, some colleagues and I left the consulting firm we were at, and we started our own firm. And it really was the entrepreneurial story of legitimately 5 dudes around a kitchen table. And we grew that to 95 employees and 30 million in annual revenue. It was an incredible run. And then in 2015, we decided it was time to sell that business. And that's what really kicked off my real estate career, because I had the capital from selling the business. And I didn't know what to do with it. I knew I didn't want to put it on the stock market. I didn't want to put it all in a savings account. I didn't want all my eggs in one basket, but I didn't really know where else to put it. So I started looking at alternative investments, started researching, looked at a bunch of different things, and really kind of fell in love with real estate for a lot of the benefits, cash flow, appreciation, tax savings, like all the reasons people invest in real estate, all fit for me. And then, so I did a bunch of like hodgepodge things in real estate, from like single family rentals and duplexes to house flipping to buying houses on contract, even doing some other like just private lending for folks that were building developments and buildings and other things. But then I really learned about multifamily, and multifamily really just made sense to me versus buying office or buying something else. Cause it's like, man, at the end of the day, people need a place to live. Like keeping it simple. You got to have a place to live. You don't have to have a place to work. We've all proven that. Right?
True.
But you got to have a place to live. And there's just a lack of affordable housing in this country. So there's, I was I was a finance major, econ minor in college.
Where'd you go? Where'd you go to school?
IU, Indiana University. But I always, deep into the econ stuff. And so again, just trying to like keep the thesis simple. If you're in a situation where there's more demand than there is supply, well, then prices increase. That's like econ 101, right?
Yeah,
and
true.
so for those reasons, I was like, man, multifamily, I think makes a lot of sense. And then I learned about syndications, and I was like, wow, okay. Like I just had the right mentor at the right time, because I was going to go and like sock all my money into one property. And then you're like, okay, well, it's multifamily, but you're still a landlord, right? And you're still have all your money. I have all my eggs in one basket. Right. And I had a mentor come through and teach me about syndication. And then like all the light bulbs started going off, and I was like, wow, okay. So I can actually pool my money together with other people. We can go buy something bigger and better than any of us could on our own. And I think, wow, that makes a ton of sense. And so I started in 2015 investing passively with other people. So that was really how I got started, was just investing with other sponsors that were doing deals, and just wanting to, always with an eye that like, I think I could do this on my own. Like I really had developed this passion for real estate and this love of it, and saw it as a way that I could do something I enjoy but make money as well. It's something I could actually turn into a business. So from 15 to 19, I really just invested passively with other people, always with this eye of like, I want to learn as much as possible from them to take what I liked and what I didn't like. Same thing I did with the consulting, right?
Yeah.
Learn from the businesses. Now I'm learning from the people in this, doing what they're doing. And then in 2019, I went out and was a GP or general partner on my first syndication. And we bought 250 units down in Atlanta, again, with some partners who are more experienced than me. So I'm continuing to further my education. I'm kind of sitting shotgun at this point, you know?
Yeah.
And then in 2020, I joined actually a mentor of mine's company because he saw us having some success on the syndication side. He's like, you know, why don't you come? He owns a big private equity firm here in Indianapolis. He's like, why don't you come on as a partner and build out a line of business on our platform, and you can use our resources and you can continue to grow. And so I did that through 2020, and we did 4 deals together.
Wow.
And it was great, a great experience, great learning experience, learning from like a very high level institution. But then at the end of the day, you know, I'm an entrepreneur at heart, and I didn't want to build somebody else's business. I wanted to build my own business the way I wanted to do it. And so I decided in May of 21 to leave just a little over a year after being with them. And yeah, and so since then, you know, I've been building Hudson Investing, and we've got, you know, we're closing on 3 deals in the next 30 days, and we're just
exciting.
Yeah, we're just rolling now, and it's just been a fantastic journey of like growth in every aspect. I mean, I've crushed so many limiting beliefs, and I've been out of my comfort zone more in the last couple of years than I have my entire life. And nice. But it's just great. It's just growing in all ways. And so it's exciting for me. And I mentioned this before, but like with real estate, I found a passion again that I lost. When we sold our consulting business, I really kind of lost the passion, because my passion was growing that business. It wasn't necessarily like the day-to-day work we were doing with the clients. So when we sold that business, then I went to work for the company that we sold to, right? That's kind of how it works when you sell. They don't just let you like leave. They're like, okay, well, no, now you got to like perform.
Yeah.
And so I was really just in a place where I wasn't happy with work and what I was doing. And in real estate, I really like found that fun again, and the ability to again, rebuild a business and kind of take all my lessons learned, which is cool because you get to like step over a lot of those missteps from the first time around. And I'm just, yeah, having fun with it. I'm just super thankful for the success we've been able to have, and hoping to just continue it now, just rinse and repeat.
Yeah, man. Well, that's awesome. And it's an inspiring story, you know, I think for myself and the Happy Hustlers to see, you know, you started in like the knowledge acquisition phase, which we all start. Like when you were learning, you first invested more passively with a couple, you know, syndication deals that maybe didn't require the high level understanding that where you're at now, where you just were learning, you're acquiring knowledge. And that's the first step, I think, and very important for people to realize. You got to start with the education phase. Then you moved into more of the execution phase where all right, now I'm doing it myself. I'm a GP on the deals. I'm making moves. I'm making deals. Like now I'm the guy running the syndicated, you know, partnerships. And then you said, all right, now I'm going to do it on my own. Like now, you know, full time, like now I don't really need these people. But you went in that progression. I think so many people out there, they look for the quick fix or the instant success, you know, but here you got Kent talking about how it took him, at least 10 years to get from where you started in real estate, or at least close, you know?
Yeah. I mean, 6 years. It was really, like 2015 was really when I started like researching and learning about real estate. So, I mean, that is probably a long journey for a lot of people, you know, that think about, you know, you take a course and then you want to just like get started. But for me, it was just a recognition of, man, like there's a lot I don't know. And then there's even more that I don't know. Right.
True.
And investing my own money is one thing. But investing other people's money to me is just another level of just commitment, and you know, and I just wanted to make sure that I knew what the hell I was doing before I ever asked anybody for an investment, right? And so I felt like I wanted to have a really strong knowledge base, and that's just kind of how I am anyway. Like my wife always gives me a hard time because she's like, she'll like explain to our friends, you know, she's like, Kent's the kind of guy that like, if he wants to buy a TV, he's going to go look at like 40 TVs and analyze all the different specs and find like the exact perfect TV and the exact size for the room and everything. And like, And I was like, yeah, it's kind of true. It's kind of just how I am. So like when I approach anything, like I just want to know all about it. And so, you know, but that's kind of how I approached it. But now I feel like I'm at a place where there's not many problems that I don't know how to solve. And if I don't, I've got the resources around me, the mentors and the contacts to know how to. And so without that journey, I wouldn't have the knowledge, and I also wouldn't have the network.
Yeah, no, it's so true. And I think that learning mindset, that always the student, never the master mindset is what allows you to be successful. It allows the happy hustlers out there listening, to be successful. You have to have that mindset where you can learn from every situation, every individual, from the garbage man on the street to the CEO in the boardroom. Like everyone has a lesson that can, share with us in some capacity.
Yeah.
Now go ahead.
Oh, I was just going to add one thing to that, because I think you're exactly right. And I think the other piece of it is the ability to change your opinion based on what you've learned.
Oh,
because
true. Yeah.
I read this book recently called Think Again by a guy named Adam Grant. And it's all about that. It's all about rethinking and essentially changing your opinions based on, we're learning new things every day. So like, why would you have the same opinion 10 years ago that you did today? Because you've learned so much in the last 10 years. And so it's just this idea that like, it's okay to rethink opinions and beliefs and revisit them and change, and have a different opinion today than you did yesterday, because you learn more. So I think learning, but then applying that to actually change your approach is what's so important.
I love that. And it kind of reminds me of this quote by Zig Ziglar. It's, people don't change their decision. What they do is they change their decision based off of new information, so it's like, they're not going to turn a no to a yes without new information. So you have to provide new information. You have to learn new things. Same thing with your own mindset, your own self-limiting beliefs. You have to acquire new knowledge in order to change from those restrictive thoughts. So I love that we talked about that. Now I do want to speak directly to the aspiring real estate, investors out there. Like, they're looking to get their first deal done. Like, they want to either, buy a home that they can rent out a portion, or like maybe do a duplex deal, or, they're just early in their real estate, journey. Speak to them and tell them maybe, like some of the things you wish you would have learned, and maybe the steps to get to like the next phase.
Yeah. Well, if you're just starting out, like maybe you're younger, maybe you don't have a lot of things tying you down. Like me, I got a family, I got 3 kids, I got all these things. If you're younger, and, I'll preface this with cause I run a monthly meetup where it's just like a real estate networking event. And
awesome.
And I had a lot of people come to me and ask the same question and be like, how should I get started? And the problem with real estate is there's a million ways you can do it.
Yeah.
And so I felt like I would just throw the fire hose at them. And at the end, they're kind of like, so I've boiled this down to like, look, if I had to start all over again, I would house hack. I would buy a duplex. I would live in half of it, rent out the other half, get somebody to pay my mortgage for me. You can get if you're a first time home buyer, you get an FHA loan, super low down payment. And then you learn how to be a landlord, you learn how to take care of a property. And I think that's a fantastic experience. And you don't need much money to get in that way. And then you live in it for a year, and then you can do it again and do it again. And I would do that for like 5 years until I've got like 10 units. And at that point, you got a pretty good base of income. Like, you don't have to have 100 units to have a pretty decent, amount of passive income coming in. I mean, you get a few $1,000s coming in a month from 10 units. And that's a great then platform to take it to the next level, because you've built track record, you've built lending experience, right? With bankers, right? And at that point, you can start to point to something if you get to that next level and you want to start bringing in other investors, you've got something to point to, right? Not just, hey, I've got this crazy idea, I want to get started. And so to me, that's how I would start over again.
Yeah, that's a great point. Just like start with house hacking, getting your first deal done, maybe a duplex or a triplex where you can rent
quad, whatever. Yeah.
Yeah. And then, in terms of you doing another deal, well, now you got your mortgage paid for. Now you can leverage some of that capital and that equity to put it into another property and continue the process. And then eventually, maybe do some apartment deals. Is that where you focus now more so, like multifamily? You mean apartments, like bigger, large scale apartments?
Yeah. By multifamily, I mean apartments, typically 50 units plus.
Yeah, got it. Okay. So right now, I mean, I am curious, like, what's your take on the real estate market? I'm sure you get that question all the time, and everyone wants like a prediction. Like, can't tell us
Yeah.
18 months from now where we at, man. You know, like I'm sure you get that, but like,
Yeah.
what's your expert opinion on where we're at and where we're headed?
Yeah. Good question. Very, very nuanced, but
Yeah.
I'll give my best, like broad strokes.
Yeah.
So it first of all, like it very much is dependent on market, right? Like each city is different. Each neighborhood within a city can be very different. So like just as
Mm,
an investor, you need to be thinking in that way. Like you can't just think I'm going to go to Phoenix and I'm going to buy a property in Phoenix. It's like you got to know the neighborhood you want to be in, and you got to understand like what's happening in that neighborhood versus others. Like you got to do that level of detail. That's my disclaimer.
yeah.
The broad strokes are pretty much this. Like we're in a really unique time right now. There's been so much money pumped into the system over the past couple of years. I mean, COVID exacerbated that. Like I saw some stat, like God, I'm gonna try to remember it now. Well, anyway, through COVID, there's
Well,
another $9 trillion pumped in,
exactly. Yeah, I
right?
was gonna say that.
But no, but I saw some crazy, even crazier stat than that takes going back to like the financial crisis. And it's something like
Mm.
in the last 12 years, something like 65% of the money in the world has been created. Like some crazy stat.
Well, in the last 18 months, 37% of the all money in circulation, the US dollar in circulation has been printed. Isn't that
Yeah.
crazy?
Yeah, it is. So for that reason, right, there's a couple things going on. One is there's a ton of money out there. And while individuals have more money, you got to think about it at an institutional level where you have these massive players that
Mm,
literally have billions sitting on the sidelines where they can't find deals to place their money in because they have so
mm,
much money sitting there, sovereign wealth funds, these massive institutions, right, that really move the needle.
yeah.
And these are groups that are willing to accept a 4% return on their multi-billion dollars because they just need to deploy that capital.
Yeah.
Right. And so that's one thing is there's a ton of money out there. The other thing is money is really cheap to borrow. Interest
Yeah.
rates are extremely low, historic lows, and we don't see them really going anywhere anytime soon. You know,
Mm,
all the leading indicators and the curves are saying that things stay relatively flat and low for the foreseeable future. The only guidance we have is from the Fed saying that in 2023 they're going to start to raise interest rates.
mm,
But they've also, but that depends on how the economy is running, right?
mm-hmm.
And here's one thing, you know, everybody's talking about inflation right now. Like inflation, we got to be scared of inflation. I mean, this inflation is fabricated because they're pegging against year over year growth. Well, everything was depressed last year because of COVID. Prices hit the floor. So if you're you're not comparing against normal prices. You're comparing against depressed prices and saying, well, it's
It's
grown so
true.
much. It's
Yeah.
like, yeah, but prices should have been here. And so we haven't seen the crazy inflation that the news talks about because it's a good headline in
Mm,
reality. And so, because the thing that's going to drive interest rates up would be inflation, right? That's why interest rates rise is to curb inflation. The thing that the guidance the Fed has given that's been different in the last 30 years, and if I'm getting like too detailed, let
no,
me
I
know,
love
but
it.
this
I
is where
think
I
the happy
go.
hustlers love it too.
Um, is that the Fed forever has said our goal is 2% inflation, but they saw it as a cap. So anytime we sniffed 2%, they'd raise interest rates and inflation would dip. So we haven't hit 2% inflation in like 30 plus years.
Mm,
Now they've come out and said, you know what? We're changing our approach. 2%, we want 2% average inflation. Well, if 2% is the average, what does that mean? It means sometimes it's got to rise above, right?
mm,
So what that means is the Fed is actually going to, for the first time, let inflation actually run a little bit for a while until they start to raise interest rates, which means interest rates won't rise until farther down the path. And so I
mm.
think we have in the foreseeable future, which I'd say, you know, 2-ish years, then my crystal ball gets real murky, especially as we head into a new presidential election,
Yep.
is low interest rates. The money's not going away. There's nowhere for it to go.
Yeah.
And in many ways, we have to keep printing money to continue our deficit spending.
Yeah.
And so we're in this environment where assets are appreciating like crazy. I mean, in some of the markets that I invest in, assets have appreciated 30% in the last 6 months
Whoa.
because there's people are willing to pay prices that I personally wouldn't pay, but people out there are willing to pay.
Yeah.
And because of that, I think you're going to see continued asset appreciation. So owning assets is a great way to go.
Yeah.
I think, whether it's you see the housing market, right, through the roof in almost every city.
Yeah.
I mean, even in Indianapolis, which is like a steady Eddie Midwestern market, housing prices were up like 15% last year, and they're up like the same this year.
Wow.
And so to bring all that around, I think here's the thing. In 2014, which is like when I went to my first real estate conference, I remember everybody was like, "We're at the top. You got to sell. We're at the top." Well, what's happened the last 7 years? Things have just gone up and up and up and up. And so now people say, "Well, we got to be at the end. We got to be at the end." You say, "Well, why?" Well, because the market's been it's been too long. It's been too long. It's got to correct. Well, sure, but real estate doesn't just correct because it hits a 10-year timeline or something, right? It's like something actually has to happen. And then the foreseeable future, the next 2 to 3 years, I'm looking for indicators that are telling me like it's going to start to go bad, because I don't want to have that rosy picture, right?
Yeah. Yeah.
But I'm not seeing a lot of that. And the only thing that I think could cause that would be oversupply. And that's really how real estate cycles work, right? Is you have, there's lack of supply, so rents go up. Yep. And rents go up, you can make more money. So people start to build, and people start to build and build and build until you hit a point where there's too much supply and vacancies drop, rents drop, right? Yep. And then, it doesn't make as much sense to build anymore. So they stop building and it goes down. And then you hit the point where, well, we're not building. So vacancies go up, rents go up. And, that's why real estate cycles do what they do. That's the only thing I could really see. But it's going to be city by city, it's going to be market by market, just like it was in 08. Markets like Phoenix and Vegas got crushed in 08. Markets like Indianapolis, it was kind of a blip on the radar. So you just got to pay attention to your market, pay attention to interest rates. But I don't think you can go wrong with rentals in the next couple of years, whether you're doing single family, whether you're renting mobile homes, apartments, whatever your flavor is. At the end of the day, we're like 5 million apartments short from what we need in this country. And we're like 4 or 5 million single family houses short from what we need in this country. So again, if there's less supply than there is demand, what happens? Econ 101, prices go up.
Yeah. I mean, that was an amazing, recap of where
I'm glad that was recorded, because I feel like, like old school, like Will Ferrell, I feel like I just like blacked out for a second. I'm glad you got that taped.
Well, honestly, man, you need to put that on your website homepage. like that needs to be a YouTube vid for you or something, because that was good. I mean, it was really good. It was simple, it was to the point. I think the happy hustlers can understand it. Anyone listening or watching can understand, it makes a lot of sense what you're saying. And, right now it's a simple issue of supply and demand. And right now the supply is low and the demand is high. So it's driving the prices, and it's that simple,
And the other piece of it that I didn't mention is the other thing is just building costs have gone through the roof. I mean, commodities,
I was going to mention that.
All materials. So one of my best friends is a president of a home building company. They build like subdivisions, and he told me like 3 years ago, the average price for a starter home in Indianapolis was like 160 grand. Now it's over 200, because the cost to build, to buy. Because, but it's all because the cost to build has gone up. So they have to increase the cost they're selling it for. And so you're pricing more people out of the single family home market. And so what do they do if they can't go to a single family home? Well, they're going to rent longer. And that's the other thing that we're seeing people rent 5-6 years longer than they were 10 years ago.
Yeah. It's a really good point. I mean, even up here, I was about to break ground in Montana and build a new barn dominium, and I got like all the paperwork and all the specs and all of the plans designed and everything. And then the price of lumber skyrocketed, and I was like, this isn't even worth it.
You're like, man, plywood went up 300%.
Crazy. And it's, and I saw it firsthand. I mean, we then pivoted and we're just going to build a steel barn dominium, but the point is the cost of labor, the cost of lumber, the cost of supplies, it's up. And so it's an issue, you know, and it's something we all need to take into consideration when you're making real estate deals.
Well, the other thing, if I can do another tangent just real
go
fast,
for it.
is made in the USA is going to have its day again, because the cost to ship stuff over from China has gone up like 5 times just this year. You know, it used to be, maybe it's 4 times. Maybe it used to be 4 or 5 grand. Now it's like 20 grand to bring a crate over.
Wow.
So, you know, I think, I think businesses that have supply chains located in the US are going to be very competitive.
Yeah, I mean, it's a really great point, you know, and I think right now people can see, if you're looking, you know, zooming out 30,000-foot view, you can see opportunities, you know, with like what you just said, made in the USA is going to have a resurgence. So that's a great takeaway. Now, I do want to ask you, Kent, a couple different questions in a couple different disciplines, you know, not just real estate focus. I know that's not just all you do, you know.
Sure.
So I like to deem them happy hustle hacks, you know, something that you do, a tip, tool, or tactic in this particular area. And first, let's talk about health, because, you know, you're in great health, it seems. And, you know, it's important. You can't be happy hustling in the real estate game or with your family or anything if you don't have your health. So what's something that you do, maybe, you know, the happy hustle hack in the health realm that you can share?
Yeah, man. You know, I can tell, I just lost 25 pounds.
Oh, damn.
And,
good for you.
Yeah, thanks. I'm back at my fighting weight. And
there you go.
Well, but here's the reason I say that is because like with everything in life, it's all about balance, right? And I let my health slip over the last year or so for a couple, you know, just because I was prioritizing other things. I was prioritizing real estate and just building the business. I was prioritizing my family. You know, I've got a 5, a 4, and a 2-year-old.
Oh, wow. You're in it.
I'm in it. And my health just kind of took a back seat. And I was 25. I was the heaviest I'd ever been and just totally unhappy with myself. And so I, you know, hit the diet, started exercising again, kind of brought that back around, and I feel great. And so it's about the tip is like, you have to have balance in everything. You can't let, like, as a parent and as a business owner, you want to put your kids first and you want to put your business first. And you have to, like, the thing I had to learn was, cause I would feel bad if I I'm instead of spending an hour with my kids, I'm gonna go to the gym and work out, you know, I'd feel bad. But it's not selfish to do that. Like, you have to take care of yourself. You can't take care of anybody else, you know, and you gotta, and working out and exercising keeps me in the right mindset. It's everything. Yeah. And eating healthy, like eating was really where we went off the rails. It was just like, do we want to cook? Nah, let's just eat out. And then that became like, you know, once a week, twice a week, you know, it became like everything. And so we had to, like, you know, tighten it back up. The other thing that I've just picked up again recently, which has been about 10 years, is yoga. Which, cool. You know, for me, you know, I'm 36, almost 37. You know, your body starts to get older. You start to get aches and creaks and all kinds of stuff. And I had like chronic neck and back pain and all this stuff. Started doing yoga again. It's all gone away. It's all gone away. And so like, for me, that's an amazing, excuse me, just meditation, but also just physical discipline. And there's not, and it's a hot yoga environment.
Oh, so there you go.
And the reason I like that is because, I mean, it's tough to be in there 110 degrees and you're doing this stuff. And so from the ability to just sharpen your mind, and because when I'm doing it, I'm also like practicing meditation, and that I'm not letting my mind just wander. Like, I'm staying focused, you know, focusing on the breath, doing these things. And so it really is like meditation built in. And it's just a way, I think, to build like this rigor in your mind, like this ability to concentrate. And so anyway,
those are great. Those are great, man. No, I mean, first of all, I want to just extract the lesson. You got to fill your own cup. You know, you have to give from your overflow to your family, to your business, to your significant other. Like, it's that silly, you know, example everyone uses on the airplane, but you got to put your oxygen mask on first, you know, like that's what you're talking about doing, where you go into the gym. It's not selfish. It's necessary, you know? Right. And then also, like, moving the body every day. I think, hot yoga is fantastic. Yeah. And fun fact, if you stretch every day, it adds 7 years to your life. So there you go. Touch them toes, baby.
Yeah,
So,
exactly.
yep.
It's important, man. I mean, it's crazy is like, I mean, I'm not that old, but like, it's amazing how quickly you get older, how fast it goes away too. I
Yeah.
mean, it comes
Oh
stiff
yeah.
as a board.
Yeah, I hear you, man. Well, let's talk about money. I
Yeah.
like to really, I think sometimes money is like this difficult topic for many people to talk about. And I like to just see it as a frequency, as an energy, as something that you become more of who you truly are with money. And, I know you made a bunch. I'm sure you lost a bunch, like we've all been up and down. And I'm curious, if you have a happy hustle hack in regards to money, something that you do to save or spend or invest wisely that you can share with the happy hustlers out there.
Man. Yeah, probably. I feel like there's probably a lot.
Yeah.
Gosh. So, I think that, well, I guess just real basic. You got to get over this, like, keep up with the Joneses mentality of like, you need the newest, shiniest, whatever thing. Like I lived that for a while. I had like, you know, twice as much house as we needed, I driving an Audi, all this stuff. Um, that was before I really got into the real estate, really started expanding my mindset, really started seeing the opportunity. Like I was looking at my life for a little bit after selling that business of like, I've hit my finish line. And I'm like, man, I'm 30, what was I don't know, 34, 35 at that time. Like I still got a
Yeah.
lot to do out there. And then like I found real estate, my mindset totally changed to this ability to just continue to grow. And like we sold our house. We literally bought a house that was half as much. We took all that equity that was locked up in the house, invested it.
There you go.
I got rid of the car, started driving my wife's 2010. I mean, it's a nice car. It's a Lexus SUV, but I was driving that for a long time. I recently just upgraded, but that was an 11-year-old car.
What'd you get? I'm curious.
Well, I got a 2017 Tahoe, which isn't, I
There you
mean,
go.
still buy used, right? But
Yeah.
we got the 3 kids now. So I had to have something that could fit 3 kids in it.
Oh yeah.
And I
Tahoe's a
couldn't in
good
that
family
other.
car. Yeah.
So, and I couldn't do the minivan. My wife has a minivan, but we couldn't be like a double minivan.
No,
family,
you can't double up.
Had to go, so I went Tahoe, but still bought used. Right.
Yeah.
And, but I just think if you can get off of that like hamster wheel of trying to, oh, my neighbor got this, I got to get that. And you can take that money and you can invest that instead and have a future focused mindset, like delay your gratification, right? It's like, you don't have to feed those endorphins and that stuff right now by buying new stuff all the time. If you can invest it and get excited that money's going to double in like 3 years or 5 years. Right. And think about what you're going to be able to, like, for me, I'm like, when I'm 45, like, wow, imagine what I'll be able to do and where I'll be, in 10 more years, stuff like that. That's how my mindset changed, just a longer point of view and just not giving a crap what everybody else is doing and driving, because the dirty little secret is most of those people are over leveraged. They can't afford their house, their car, their lives. And you have people that are making multiple 6 figures a year that are living paycheck to paycheck. That's the majority of people like that. And so like, why do that?
Yeah, dude, so true. Honestly, I love that you said all that. It is the materialistic facade that society puts out nowadays, where you have to have the fancy car, fancy house. Like, and don't get me wrong, I love those things too, but there's a time and a place. And, if you can't buy it on cash, don't buy it on credit. Like don't go into debt over a car payment, or too much house. Like, it's just not smart.
It's just, you've got to, like, those things are not assets. You need to focus on buying assets. If you buy assets, like the way the richest people in the world, it's because they own assets. It's not because they got a W-2 that's paying. It's because they own things and those things appreciate in value.
Yep.
And in that way, their wealth grows, whether it's a business, it's real estate, whatever. So if you can just get excited about accumulating assets, like true assets, not the house you live in, not the car you drive, none of those are assets. Shift your mindset. And for me, like, that's exciting now. I'm like, oh, we got this, we got that. Like, and you can see how that grows.
Dude, I love that. Accumulate assets. Like that should just be, I might even have to just make that the title of this bad boy. Cause that is like, that's the remedy,
Yeah.
appreciating assets rather
Yeah.
than depreciating assets. If you just
It really
distilled
is.
it down to that,
It's not hard to make a lot of money. You just have to be willing to give up the short-term gratification for the long-term gain. You got to be able to, instead of going and buying a big fancy house, buy that duplex and live in half of it and be willing to live in half of a duplex,
Yeah. Yeah.
like,
Yeah. It's
like,
true.
like that kind of stuff. Yeah, I mean, just that I can imagine being like 23 years old and living in half a duplex and having somebody else pay my mortgage for me. I mean, I would have like no other expenses,
Yeah.
but like imagine the freedom that allows you to have.
Yeah, no, it's a great point, man. I love that we talked about that. You crushed it. Now, let's talk about spirituality. I don't know if you believe in one God or another. And for
Yeah.
me, it's about faith. Um, it's about having morals. It's about like
Mm-hmm.
believing in something bigger than myself, and I'm just curious if you have a happy hustle hack in regards to spirituality, that you could share.
Yeah. So I grew up Catholic, went to like, I don't know how many, 13 years of Catholic school, all the way up.
Mm,
I would say, so that was kind of my upbringing. I think my faith has evolved over time though, to more of like, yes, I believe there's this higher power, but I believe more that it's all just more of an interconnected type of,
mm,
I don't know, energy, whatever you want to
yeah.
call it, if you will. I really do believe that like this idea of that thoughts are things, and the things that you think about, you can create. And I think that you
Mm,
can manifest things. I think that I've seen it happen in my life. I've seen it happen to other people's lives. Um, and so, I think there is something out there bigger than all of us. I don't exactly have my finger on it yet, but yeah, absolutely. My hack, so we talked about the yoga and stuff. I try to meditate every day.
awesome.
And then the thing that I'm not great at, but I really want to be better at, is just gratitude.
Mm,
And just, I feel like if you can stay like a current mentor of mine has like challenged me to like, I got to start a gratitude journal and I got to start a blessings journal. And
yep.
I love this concept because they're different. So the gratitude piece is just being thankful for what you have, for what
Yep.
you already have. Right. And because if you're in that mindset, then it's impossible to be in a negative mindset while you're thinking about all the things you're grateful
So
for.
true.
Right. So
So
it
true.
stops that cycle, that thought process in your mind. Right.
Yep.
The blessings thing I thought was really cool because, and this is good for the world today, because like you think about Instagram, we talked about keeping up with the Joneses, all that stuff. Like it's so easy to be like, oh man, that guy, it'd be envious and jealous. And that guy has that, or man, me and that guy, like we started at the same time. He's so far ahead of me. This type of thought, it's all
Mm-hmm.
negative, right?
Compare
Well,
and despair.
compare it exactly. And so my mentor, he's like, the way that you get out of that is when you're thinking about that, you bless that person and you say, man, you know what, like bless him for having all that and
Yeah.
doing the work to get that, and he deserves that, and blah blah
Mm,
blah. And like honestly, like believe it or not, it gets you out of that negative mindset, puts you in a positive mindset, and lets you get past that thought. And then you say, you know what, and I'm going to take from his lessons the things that are going to help me improve and
yep.
get better. And so you write down 3 things you're grateful for, and you write down 3 blessings, like 3 things that like should be negative, where you're like, this guy's got this or that,
Yeah.
and turn
Yeah.
it into a positive thing.
Oh
And
man.
it really does make a big difference.
Dude, that's great. I love that. And I have my gratitude journal right here actually. And I live now in a constant state of gratitude. I pride myself on being optimistic and
Yeah.
grateful. And the blessings part, I did that, subconsciously. Just yesterday, I saw a guy online, he's kind of a goofball and he's owning it and he's making money doing it. And he's got like million TikToker follow, well, whatever. I don't go on there,
Yeah.
but I know he does because he was in my mastermind for a while. And I said, you know what? That guy is being unapologetically himself and he's owning it. Good for him. You know what I
Yeah.
mean? And it
Yeah.
reminded me, like, be unapologetically yourself. So I love the blessing and gratitude journal, man. That's great. Now, Ken, I do want to just, mention to the happy hustlers where they can connect with you more and learn more about you. Give us some links.
Yeah, sure. So You can go first to my website, kentritter.com is kind of my home base. Yeah, my blog's there. You can see
You're
my
looking great
podcast,
in that
videos.
suit, man.
Thank you. Thank you. Yeah. Yeah, man. No, the pictures turned out fantastic on that.
Yeah, really.
And so my website for sure, I have a podcast as well. It's called Ritter on Real Estate. It's our tagline is passively invest like a pro, because it's me interviewing the pros to teach people how to be better investors. And it's really about, how do you vet that sponsor that you might be sending $50,000 to, right? How do you vet the market? How do you vet the neighborhood? How do you vet that deal? And how do you do all those things in the right way? And it's all about just trying to help people make better investing decisions at the end of the day. And then, lastly, just I'm very active on social media. It's Kent Ritter on LinkedIn. I'm on LinkedIn all the time. Ritter on Real Estate on Instagram. You can find me on Facebook as well. So I'm pretty accessible.
Yeah.
And if you go to my website, you can if you're interested in investing, you can fill out a form. You can set up a meeting with me. And if you just want to get in touch, just DM me and I'd be happy to talk. At the end of the day, I love talking about real estate and all this stuff. So the more I get to do that, the better.
Dude, awesome. KentRitter.com. That's RITTER. Kent, man, this has been awesome. I do want to dive into the rapid fire round, and then we're going to wrap this bad boy up. This is basically just where I ask you random questions and you answer honestly, first thing that comes to mind. Are you ready?
Yes, sir.
All right. Favorite movie? Go.
Oh man, Caddyshack.
Oh, good one. Favorite food?
Ramen.
Love it. Favorite book?
Think and Grow Rich.
Best business advice?
Delegate.
What's your spirit animal?
Wow. Bison.
Oh, bison. Nice.
Which I've been calling buffalo for years. I just learned that we don't have buffalo in the US, guys. They're all bison. I just learned that.
Love it.
But I love
right down the road. Yeah.
Yeah. No, it's my favorite. I had this experience where I did a Habitat for Humanity thing. And we went to South Dakota, actually on a Native American reservation. Awesome. And the chief of the tribe, we were rehabbing houses for him. And the chief of the tribe hosted us, and he had in South Dakota had a bison ranch. And so he actually took us out, had hundreds of bison, took us out in his truck, in the back of his truck to these. And we got to get out and just, you stand there. They're huge, as big as an F-150. Like they're massive and just incredible animals. The thing I thought was cool was he had cattle and he had bison. He's like, the cattle, you got to do this and that and whatever, and take care of them. And they take a ton of time. I think the bison, they just chill. You just let them do their thing, let them roam, and you never have to take care of them. And like, I don't know, they're it's an American symbol. They're just majestic. I like it.
They are, dude. They're awesome. That's cool. And appreciate you sharing the story. Now, what is a superpower that you wish you possessed?
Like a real superpower?
Real superpower.
Fly.
Right on. If you had one billboard for the whole world to see with your last piece of content, what would that billboard read?
Oh man. There's a better way.
Love it. And 3 things you're most grateful for.
3 things I'm most grateful for. My kids, my wife, my health.
Nailed it. Kent Ritter, you crushed that rapid fire round, man. And I just want to say, thank you, and take a moment to acknowledge you, man, for sharing your love, your light, your wisdom, your real estate knowledge, your amazing predictions, your blackout that just was absolute gold. Seriously, man, this has been awesome. And I appreciate you coming on and rocking the mic. So thank you, man.
Yeah, no, I appreciate it, Kerry. I had a lot of fun.
Yeah, man. Any final words before we say the last question?
Gosh, man, I feel like we covered just about everything. The thing that I really want to get across to people is that there's a better way to build wealth, which whether you want to be, rich or not, like no matter what your goals are, like having a little extra money never hurts anybody. Right. Nope. But there's just a better way. What we're all being fed in most media with, it's the stock market, and it's your 401k, and it's the only way to get there. Like, it doesn't work. It doesn't work. Like, we have the people, 401ks haven't been around that long. And the people that really started with them are just now retiring. And what we're learning is they don't have enough.
No.
They don't know how, they don't have enough. And so there's a different way. Educate yourself and just follow that different path. And don't worry about the naysayers.
Again, accumulate assets, people. Love
Accumulate assets. That's it, man. That should be the billboard. That was
the
billboard.
Dude, that is.
I missed it.
Yeah. Now, final question. What does happy hustling mean to you?
Man, I think it's exactly what you've been talking about. Happy hustling means you finding joy in the process. Like you're no matter, like this is what I learned in selling my business and feeling like I was at the end of the finish line and I wasn't happy. Because I met my goal and it was like, well, now what? Like you have to find, no matter what your goal is, you'll hopefully will always reach it, but you always got to have something else. And really the way you find joy is in the day-to-day in the process. And you have to be happy. You're not going to be happy in a year from now when you reach your goal if you're not happy today. Like it doesn't just happen like that. Like you got to find happiness, I think, in the day-to-day. And I think that's happy hustle.
Amen to that. Kent Ritter, everyone. Thanks for watching and listening. Peace and love, y'all. We're out.